a few things that are really important that he stated in this thread. Now, Raoul Pal, he is quite a wealth of knowledge. A decades-long career in traditional finance, he ultimately found his way into crypto. There's a reason that he's got over 1.2 million followers on X. And you know the most important thing that I've learned as it pertains to crypto cycles and what causes them? The most important thing I learned, it actually came from Raoul Pal, and he's the reason that so many people in crypto, including myself, are talking about it. So credit where it's due. And people steal so many of his charts. I always say, like, spread people's work if you like it, but give them credit at least. Like, come on. But it's Global M2, frankly. And I'm going to explain to you why. Global M2 is, if there's like one go-to source, and not that literally anything, no metric is literally the end-all be-all, but this is as close as it's going to get. Global M2 absolutely is, and so I'm going to explain to you why that is. Have you wondered, because you've heard of there being 4-year cycles, and it's clearly not because of the Bitcoin halving, so have you wondered exactly why it is that we do see 4-year cycles, and why, as a result, we absolutely should expect XRP and the rest of the crypto market to go blasty blast? Because I'm going to explain it to you in greater detail in this video. I'll just say this. If you're not a crypto bull here, you're going to be by the end of this video, or else something wrong with you, son. But before going further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, so the market, it went down a bit yesterday, it's safe to say. XRP, as I record this, $2.80, Bitcoin at 108,637 bucks. So yeah, there are some people that are feeling a bit distraught over all of this, but you shouldn't feel that way. It does not make logical sense to feel that way. That's my humble opinion. By the way, as I record this, it's 4:27 a.m. Central Time, so it's now Saturday, August 30th, 2025. And look at the Crypto Fear and Greed Index. 39 out of 100. The market's in fear. You know, I was here when that, back in the day, like, I can't remember when it bottomed. Maybe it was a couple years or so ago. Maybe less than that, actually. But whatever it was, I remember we got into extreme fear, and it was at 5 out of 100. And I said back then, when we were at 5 out of 100 in extreme fear, it doesn't matter. At some point in the unknown future, we will be in extreme greed. And wouldn't you know it, we got up to whatever it was, 90 or so, whether it was a little below or above that, I don't recall for sure, but it doesn't matter. But we did get there. We did get into extreme greed, didn't we? And I said once we were in extreme greed, we're going to be back in fear and ultimately extreme fear at some point. And it's just to highlight the point that you're going to teeter-totter back and forth, but we keep trending upward, so it just doesn't matter. If you have a long enough mindset and you have sufficient diversification in the coins that don't suck, you're probably going to be okay. And what coins don't suck? Well, you could go with what the market thinks makes sense. You could just invest in a bunch of large caps and play the waiting game. That doesn't sound like the worst investment strategy. And I know most people, they get greedy and they go way too far out the risk curve, and they go heavily out the risk curve, meaning they invest mostly in small caps. You're probably going to get wrecked doing that, to be honest with you. But here's what Raoul Pal had to say. And by the way, I'm not saying you shouldn't invest in small caps if you want to. Do whatever you want. I'm just telling you my opinion. It's the safest bet where you can still get crazy life-changing wealth investing in large and maybe some mid-caps. Just my opinion. But here's what Raoul Pal had to say. And this is, by the way, so this is the crypto total market cap excluding Bitcoin and Ethereum. The total 3 chart is the name. And he says, let's talk about the crypto waiting room. Many key parts of the crypto ecosystem are in the waiting room, ready to launch. Let's look at a few. You will have yours too. Total 3, excluding Bitcoin and Ethereum, ready to launch from the waiting room. And you can see what's happening here. And by the way, a lot of these charts, and I'm going to show you them, it shows long consolidation. So in this case, a multi-year consolidation effectively, and because it's altcoins, and it shows trending upward, but it's kind of like we're getting to a point where it's clearly a narrowing range of volatility. You're going to see that again and again here. You just got to kind of ask yourself, at some point, this thing's going to burst one way or the other. Do you really think that we're going to, for the first time in history, burst to the downside when this thing breaks and not have an alt season for the first time in history? Highly doubtful. And if you hang through this video, you'll see why you should be optimistic that XRP and everything else is just going to ridiculously rip to the upside. I am going to go into detail. Just let's go through it in the order that he laid it out, though. Here's the others chart. That's the name of the chart that shows the the top 125 coins by market cap, excluding the top 10. So XRP is not in here, but this is worth looking at because it gives you a good idea of what's happening with top alts, some of the more reputable alts out there. And so if you're wondering about alt season, yeah, and the whole market moves in tandem. But still, it's worth looking at this. And so here he wrote others outside of top 10, purest form of alt season where all shit rises, still in the waiting room, but longer to launch. And you can see this going back to 2021. That's how far back he's drawn this line. Do you really think it's just never going to burst again? And it's not going to this cycle? Well, I'd be optimistic. He sure as hell is. And I'd argue for very good reason. And so here he shared this Ethereum price chart, and Ethereum is important because it kicks off alt season, so even if you don't hold it and that coin itself isn't of interest to you in any sort of additional manner, that's fine. I don't blame you. I'm not that interested in it myself, even though I've been holding it since 2017. But here he says ETH, full port. And when he says full port, that's his way of saying this thing's about to rocket. That's exactly what that means. And Ethereum historically has kicked off alt season, so you love to see that. Same thing with Solana here. He wrote Solana, next to leave the waiting room. And you can see he's drawn this back a couple years. He believes it's going to pop yet again. And similar story with a couple other coins, including Sui, including Doge. And then you get down to XRP. Here's the XRP chart. And he wrote here, XRP in the process of full porting. So he knows what's coming. He knows that this thing is going to absolutely rip to the upside. He's been holding XRP for like probably close to half a decade at this point, something like that. Long time here. So I'll just tell you this. I'll be surprised if he's wrong. I will be super duper surprised if he's wrong. It's just it takes time for these things to play out. And you can see the lines he's drawn, various market cycles going back over a decade, quite literally. It takes a long time for this stuff to play out. And either you have exposure when the big bursts happen, or you do not. It is your choice. You do whatever the hell you want. I believe this thing's going way higher. I would love for it to have happened yesterday, but I'm an adult. I recognize I can't control that. So I only control the stuff that I can control, and I don't worry about the rest. I can't control when the market pops, but I do believe it's going to. And so what do? Well, after I buy, I do literally nothing because I don't need to. Like, this is so cool. You can just put money in and then get life-changing wealth by after that just literally doing nothing. It's just one day if it's worth more, you're enticed to sell, you can do so if you choose. That's it. And there's never been a faster and real wealth-generating mechanism than this. There's never been anything like this, in fact. The advent of the crypto asset class, the degree to which it changes people's lives at this speed, never been anything like this in the history of our species. You should be very thankful to be living in these times because, people way in the future, they will look back and wish that they had. Maybe they'll be happier with whatever newfangled technology they have, but they will wish that they had the opportunity for easy, life-changing wealth and the multiplier effects that we get here. So yeah, XRP, is it going to rip? Yeah, it ain't done. And historically, you shouldn't expect it to be anyway. It normally has one massive move over a relatively short period of time, which we got at the end of 2024 into 2025. Then it consolidates for maybe a little over half a year, and then it has a second rip. So it only rips when the entire market goes, but everything is so perfectly queued up. And if you want the biggest reason, what I referenced earlier in the video, we should talk about that right now, and we're gonna. Because this is my channel, damn it, and I do what I want. And so here you have it, folks. You have the black line, which is global M2, and then you have the pink line here, which is Bitcoin. And so Raoul Pal simply wrote here, people need to learn patience. The path is clear, excuse me, but never, ever expect tick-for-tick perfection. It's the pattern that counts. Yeah, and so the reason he's mentioning that clearly is because it looks like there's some sort of deviation, but as I pointed out 1 or 2 days ago, if you look over any short period, you can make that argument, but then you zoom out, and if you got eyeballs, you can see that it correlates. So at some point, this is going to snap closer back into place. That's a virtual certainty. And then you'll zoom out and be like, see, told you. Because there's been so many times over the last couple of years where I've seen people say, Bitcoin's detached from M2. And I'm like, yeah, you're looking too short a time frame. Let a little time pass. You're going to see it correlates. And sure enough, it does. Because why wouldn't it? Well, there are a lot of reasons. Let's run through them. So again, if you want to know, and this is the most, honestly, you should please stay tuned if you got time, because this, what I'm about to share with you, this is the most important thing that I've ever learned in my nearly 8 years in crypto on the topic of What drives the crypto market? What I'm about to share with you literally right now, this is it, and it's why you should be optimistic. And we don't technically know anything for sure. I certainly cede that point. I know I don't know for sure, and there could be a black swan event, but outside something like that, I got a pretty good idea directionally what's about to happen. And so, global M2, it's the broadest measure of money in the system, truly globally. So it's, cash, deposits, money market funds, and it's the most liquid money effect. Or, well, M1 technically is, but M2 is the next level. But what you need to know is it rises, global M2 rises when central banks print money, when governments run deficits, or when businesses and banks expand credit. And now, conversely, of course, it can slow, or fall when central banks tighten. Lending dries up, of course, or debt is repaid instead of rolled over. More on that in a second. But Bitcoin and by extension the entire crypto market, including XRP, it tracks M2 because liquidity drives risk assets. What are risk assets? Well, it's everything it's all crypto, frankly, including Bitcoin. These are considered risky assets. And what's considered risky asset? What else? And equities. In the stock market, small cap stocks. So, like if you look at the Russell 2000 index, full of a bunch of small cap stocks, those are considered to be riskier, whereas the large cap stocks are considered to be safer bets. You got your Apple and Facebook, so on and so forth. Those are considered safer. So, it tracks him too, again, because liquidity, it absolutely does, it just drives risk assets because there's more funds. Look, when there's more money in the system, those dollars have to be allocated somewhere. They don't just sit in checking accounts. They flow into stocks, like I said, real estate, and yes, even crypto. So why the familiar 4-year rhythm? Why do we have cycles? Well, I'll tell you this. Again, it's not the Bitcoin halving. It sure as hell is not that for a ton of reasons not worth delving into in this video. I've said my piece on that before. But look, debt is constantly maturing. And instead of paying it off, governments and corporations almost always refinance. Most maturities cluster around 3 to 5 years, averaging out to roughly 4 years. So, and that is it. That is the reason in a nutshell. When these big refinancing waves hit, new debt issuance expands the overall money supply. And so that extra liquidity, it looks for returns. And a large share gets funneled into risk-on assets like stocks and crypto. That's it in a nutshell. And so, and by the way, when firms refinance, a lot of times they're refinancing larger amounts too, actually. And so, that's why Bitcoin tends to lag global M2 by about 3 months. And it does. That's why if you look on this chart, the black line doesn't line up with the pink line. That's because, again, Bitcoin lags behind M2, global M2, liquidity, by about 3 months. And it's why the crypto market has followed this repeating 4-year heartbeat since the financial crisis. And to be clear, the 2008 financial crisis is what kicked off this 4-year pattern. Absolutely it is. The economic collapse, it resulted in every person in business, not literally, but like every person in business needing to take on debt at the exact same moment in time. So they ended up with loan maturity dates typically 3 to 5 years out from that moment when the great financial crisis happened. They ended up with loan maturity dates 3 to 5 years out. They took on debt so that they could sustain their businesses. Individuals did it too. And so that's 3 to 5 years out, but again, averages out to about 4 years. So when the terms of these loans come to an end, most of these businesses still have corporate debt, and they can't afford to pay it all off at once. They don't have the funds for that, frankly. Their only realistic option is to refinance that debt. And so that extends out yet another 3 to 5 years typically. Again, averaging out to about 4 years. That's why this is happening. It's because of refinancing. That's it. Because look, they take on debt, the terms of the loan come to an end, and then what do? Well, if you can't pay it off, you better get a new loan, right? And so it's all lined up because of the great financial crisis. So global M2 increases, and then people, businesses, and institutions invest gradually. So, when there's a surplus of dollars as global M2 inevitably increases, it does take about 3 months for those dollars to find a home. And that's why Bitcoin lags behind global M2 by about 3 months. And that is why, since that happens every 4 years, and we know sure as hell, it's on your screen right now, look at that bitch. We know sure as hell that mofo It has been rising, and we know that Bitcoin lags behind it. It just does, not down to the minute, the second, the day, the week necessarily, so on and so forth, but it tends to correlate behind by about 3 months. We know that. And we know that this is, look, again, no metric is the end all be all. Raoul Pal would tell you the same thing, I'm willing to bet, not to put words in his mouth, but this is as close as you're going to get. This is as close as you will get to an end all be all metric. It's right there staring at you. It's not done. Global liquidity rises. It's not literally perfect 4 years, but it's very close. And so you just look at what's happening here, and why wouldn't we catch up? There's more money sloshing around. It must go somewhere. Where do you think it's going to go? Like so much of this, it's loans. It's literally loans. Where do you think it goes? Do you see why it's lined up every 4 years now? And why it doesn't make sense to think that the cycle's over right now? That does not make logical sense. It is not remotely probable that the market cycle is over right now because we haven't even caught up to this. The best is yet ahead. We'll see how high Bitcoin and the crypto asset class goes. I don't pretend to know what the answer to that is or exactly what the timeline looks like, but in general, isn't it obvious that the most probable thing, though technically not certain fine, the most probable thing is that yes, we continue to the upside? It's data on your freaking screen. So if you're feeling scared, you tell me why your feels are more logical to hold than the perspective that I have right here and that Raoul Pal has shared with people. Obviously, if it's just your feels, no, it's not more logical. It absolutely, unquestionably is not. This thing's gonna rip. And XRP is like either the best or one of the best positioned top coins in existence. I will not be surprised if XRP literally ends up being number one in performance this market cycle out of the top 100 coins. I mean, it has been since November. It still holds that title, so let's see if that persists. It certainly could, but even if not, it'll be towards the top. I do not doubt that one little bit. And take a look at this. It gets better. Oh, we ain't done, folks. We ain't done. Here's another slide from Raoul Pal. This is total liquidity index year over year percent. This is a fun one, too, because it's forward-looking. I love this. Raoul Pal, man, I am so glad that he shares the information that he shares. I mean, without this piece of information, it would be, like, I'd still be confident, no question, but in terms of confidence for this market cycle not being over, I mean, I'd have it probably based on other things, too. Not to this degree. Definitely not to this degree. And so, again here, total liquidity index year over year percent. He wrote, and the rate of change is only going to rise in the key metric of total global liquidity. The US, EU, China, and Japan all need to roll debts. This is an absurdly bullish backdrop, along with the reg changes, this, digital asset treasuries, and sovereign accumulation, along with Wall Street acceptance. So that's right, on top of the fundamentals that we all know, we know that the largest capital market on the planet, the United States, for the first time going into a bull market, is pro-crypto, explicitly pro-crypto, and the war on crypto is over. We've got that, and all of these countries, they need to roll over debt. They need to refinance, just like I was describing a couple minutes ago. And so this chart shows the year-over-year rate of change in global liquidity. Basically, the growth speed of global M2 across US, Europe, China, and Japan as he cited. And so when all you need to know really is like when the line is rising, which it sure as hell is, look at the screen, it means liquidity is accelerating. So Raoul Pal shared this because it's a forward-looking signal. Governments in all these regions have huge debt that needs refinancing, and that process expands liquidity. So in other words, this chart is projecting what's next for global M2. And right now, it points to expansion. And since crypto follows global liquidity with a lag, that's an extremely bullish backdrop. So what I'm saying here, to be clear, is not only is it true what I showed you in the previous chart that Bitcoin needs to catch up to global M2, and historically it just always does. Not only is that true, you can see 3 months out that it should catch up, right? Even if it doesn't follow perfectly down to the second minute, the day of the week. Not only is that true, but this chart is basically, you can use it to forecast substantial growth for global M2, and then crypto's got to follow that new growth even higher when it happens. That's why he's highlighting this. That's why he's saying this is so damn bullish. It's not, he doesn't, based on what he wrote here, he doesn't seem to think that Global M2 is topped out. He thinks there's more expansion. Do you see how bullish this is? Now, do you get it now? Like, do you see how bullish this is? This is why XRP is not done, folks. It is not done, though. And then we've got this. This chart he wrote, and it looks similar to 2017. And so he's got a couple different Bitcoin lines. So this chart's comparing Bitcoin's 2017 bull run with Bitcoin today. And obviously, I mean, look at it. The patterns look strikingly similar, fair to say. In 2017, this was the pause, by the way, right before Bitcoin went parabolic. And Raoul Pal is pointing out that, you know, with global liquidity expanding now, the setup looks the same, meaning we could absolutely be at the edge of another massive breakout. History rhymes with itself, folks. It absolutely does. And he's highlighting Bitcoin here because it leads the market. The entire asset class moves in tandem. What's good for Bitcoin, it's good for crypto in general, including XRP. And then he wrote, as ever, at GMI, we are working with probabilistic frameworks and contextualization. We are not looking for perfect matches, but the rhythm and the rhymes of markets based on deep analysis. 2026 and possibly Q2 2026 due to slow business cycle forcing more liquidity for longer. Okay, so I got to pause here to note. There's only a few reputable analysts out there who I follow that are arguing there's a good chance this thing's going to extend more than just the next 2 or 3 months. He's one of them. So we'll see if he's right. He's in the minority here, but sometimes minority opinions are correct. And if he says it, I'm gonna take it seriously and listen to it. I don't pretend to know for sure exactly how long this thing's gonna go, but based on a ton of different things, he can. And the business cycle, so Tech Dev, another analyst, I went into greater detail maybe within the last 2 or 3 days, I can't remember exactly, highlighting from his perspective why Tech Dev thinks that this bull run is going to peak in 2026, actually. So again, it's a minority opinion. They could be right. They maybe it ends sooner. I don't pretend to know. But that means the fun lasts longer, frankly. So I won't be upset either way. But yes, based on the business cycle, and it's outside the scope of this video. I went into great detail the other day. But that's what he's citing right here. It's going on longer than last cycle and the cycle before that. And so he thinks that that's going to ultimately impact everything, including global liquidity. And so then you wrote Win Banana, meaning the banana zone, the fun part where everything goes crazy. We've been in it since August 2024, and the acceleration phase lies ahead. So he says we're living in the good moment. So this is a pullback, and people are fearful. You don't need to be fearful right now. It doesn't make logical sense to be fearful. I don't know for sure what's going to happen. Neither do you. Okay, yeah, again, I'll say it again. Happy to admit that. But what does it make sense to actually think is probable? Well, I've said my piece on that. And so then he wraps up his thread by saying the only question is, will your bags go up or do you have the wrong allocation? That is up to you, my friends. Buy the ticket, take the ride. I like how he wraps that up. But I like that phrase. I need to start using it. I want to steal it. Buy the ticket, take the ride. Yeah, that's exactly right. And as far as the allocation, nobody knows for sure. And nobody's right about everything. I mean, go back about a year ago, Raoul Pal was not at all convinced that XRP was going to rocket. So he was wrong about that. And I was surprised. Now, also, based on what he said, I wasn't convinced that he looked in depth to the fundamentals or what was happening in the charts. I think he just made an assumption and probably shouldn't have said what he said there. But he's a humble guy, and I respect the fuck out of that. He acknowledged that he was wrong, and he was rooting for us, and he's been an XRP holder throughout it, too. So as far as right allocation, nobody knows for sure exactly what's going to hit a new all-time high. But that's why I keep saying it makes sense to have broad exposure to the large caps especially, because those are the coins that the market is saying, we believe these make sense. And so, yeah, you get less returns with large caps, but